Hi, this is Shankar Sharma. In this video, I want to talk about how to best position your portfolio for the next 4 years. Without further delay, let's get started. Hi, welcome back. Let's get started. Here is the brief agenda of what we're going to talk about in this video. Key sectors areas to avoid, key sectors areas to focus, ideas in the financial sector, ideas in the healthcare, ideas in the industrial sector, ideas in the energy, ideas in tech and communication. And then I'm going to give you a summary of all the ideas so where you can find the opportunities. Please remember, this is not a buy or sell recommendation. The important thing for you to note here, this is the setup, which means you can keep an eye on these things, but when certain triggers happen that activate these ideas, then you can go and look at the different investing opportunities in that area and then buy that stock. For example, say technology space research is looking good, then you go and look at electrical vertical takeoff landing, or you look at space research related stocks, etc. But you do that when a triggering event happens, like when you hear that X amount of budget being allocated for this particular research or for space, or so on. So initiatives have kickstarted, then you can go and look at the opportunities in that sector and take those positions. So currently, we're only giving the setup, we're giving the ideas, we're giving the preparatory steps. And as things unfold, as triggers happen in that area, then you can go and investigate the individual stocks and then buy them. Hopefully, that little introduction was useful. So, the ideas we're going to talk about today, as I said, let's let's get started with the key sectors areas to avoid first of all. So, here are the key sectors areas to avoid. First of all, we are coming out of contraction cycles. That means you should be out of utility and consumer staples sector. In the utility, you can still purchase stocks relating to AI, energy, but other utility stocks you can avoid. Avoid Medicare related, avoid solar climate change related, avoid China stocks because they could be under pressure if tariffs get imposed. What are the key sectors areas to focus? So, some of the key sectors areas to focus include defense, financial sector, industrials, energy, discretionary communication and tech, areas like AI, oil and gas drilling. Now, if you look at these individual aspects, defense because geopolitical tensions, financial sector because visa regulation, etc., you get the idea. Oil and gas drilling because US wants to be self-sufficient in area of oil and gas production so that they can keep the price of the oil low. AI basically US want to be a dominant player in the world when it comes to AI, etc. Now, before we go deep into the discussion of individual sectors, we need to currently take a stock of where we are in terms of economy and market. So here is a list of things that you already know, and this is market and economic backdrop. US is in very healthy place. The GDP is very good. Consumer confidence is still very good. Interest rates are lower, and the situation that needs to be managed is to do with trillion-dollar debt. Technology innovation is flourishing. Credit spreads are tight. So we don't have immediate threat of major recession at the moment. Geopolitical tensions, of course, needs to be addressed. And very soon in December, there could be a debt ceiling discussion again that needs to be addressed. Now, what is a likely policy outlook next 4 years? I'm not a policy specialist. This is from the market perspective. So we know immigration is very high in the agenda. Keeping oil prices low and keeping inflation low is a primary priority. It is the priority of the Federal Reserve, but any government would want to keep the oil prices low so that they can keep tabs on the pricing structure of products and services. Also, there is a likelihood of significant tariffs on goods and services that are imported either from China or from international partners. The regulatory regime is going to be business friendly, likely to be less taxes, and it'll be a friendly fintech atmosphere for next 4 years. So let's talk about financial sector, take a deep dive. Because regulatory regime is going to be business friendly, we can expect more mergers and acquisitions to come to surface that could be more buoyant area of the market. A lot of companies could go public. So initial public offerings, there'll be big list of IPOs coming soon. Banking and finance stocks could do very well. Look for stocks with earnings and revenue growth in when you're investing, just to give yourself extra cushion of safety. Look for low debt and high capital reserves. Especially if you're trading small caps, make sure that they have good earnings and good revenue and their debts are very low. If they are banks, make sure that they have good capital reserves. Regional banks and credit card companies will also do very well, along with some insurance companies. Healthcare sector, you got to avoid Medicare related stocks. They could get hit. Insurance, pharma likely to flourish. In the new regulatory regime, there will be less constraints for the companies to take their product to the market. And research and innovation could flourish. That means more medical advances is also possible, which means healthcare sector, there could be quite a lot of opportunities coming your way. If you take the energy sector, it's going to be a pro fracking supportive environment. US wants to be a big oil producer, so you would want to keep an eye on oil related stocks both on the long and short side. The US would aim to generate more oil production. That means oil and drilling companies could flourish. Of course, natural gas producers and pipeline providers could get extra boost. But it's important to stay away from alternate energy stocks like solar, wind, but nuclear energy still might do well. Industrial sector, construction industries could flourish. Producers of steel, copper, aluminum might do well. You got to remember steel, copper, aluminum, mainly copper. And the other hand, if dollar goes up, that might work against the industrial sector opportunities. Power generators for the AI could be another area. Natural gas transporters would be another area. Natural gas generally needs to be given importance as well. Transportation area, if you look at that, autonomous vehicles, robot taxis could do well. Transport of industrials could do very well. Space research program could expand. So many space related stocks you may want to keep an eye in your watch list. Tech sector, when it comes to tech sector, the next 4 years going to be very tech friendly. We should expect support for tech, communication, space research. Artificial intelligence could likely get more boost, primarily because of the dominant position that US companies and US defense sector would want to achieve. So those kind of areas could be something that you want to watch out for. Defense sector, of course, defense security is key for next 4 years. So we may see some more investments in defense sector. Could see importance given to different projects relating to defense. And there also could be cost cutting across the governments and certain areas within the government. Fintech, of course, fintech products could see a surge. Alternate payment methods will be encouraged. Gig economy to flourish. Ride shares could flourish. Consolidation in small cap, mid cap tech very likely. Small caps generally could see a boost. So list of ideas. Obviously, you can think of small caps with good low debts and good earnings and revenues could be interesting. Small caps generally tend to move higher in the next 4 years. Finance, banking areas looking good. Transportation looking good. Industrial sector looking good. Media, find a lot of consolidations. Energy sector looking good. Healthcare and tech looking definitely good. Defense and fintech, as well as discretionary communication sector, should all be given importance in your thinking. So, as we said, these are all the setup at the moment, and they will start the stocks inside or the ETFs or different asset classes relating to these areas will start flourish once we have a trigger events for each of those individual area related events happen. So just to summarize what we discussed so far, we talked about key sectors and areas to avoid, key sectors, areas to focus. We talked about ideas in financial sector, ideas in healthcare, ideas in industrials, ideas in energy, ideas in tech and communication. And then I gave you summary of list of ideas. Thank you so much for watching this video. Don't forget to subscribe to this channel. This is Sankar Sharma signing off. See you in the next video. Bye for now.